Your underscores the importance of exploring new avenues for asset management and investment, especially in today's rapidly evolving financial landscape. As we dwell into the fascinating world of tokenization, we have privilege of hearing from a distinguished speaker, Mr. Arjun Khazanchi, CEO and co-founder of Rooba Finance. To introduce Mr. Khazanchi, a constitutional lawyer with a rich background in navigating highly regulated industries, he has worked extensively with state governments, regulatory bodies, and financial institutions. His expertise spans a wide range of legal matters, from business models to compliances for startups, making him uniquely qualified to address the complexities of tokenization in the bullion market. Moreover, Mr. Kazanchi's involvement in the world of finance extends beyond traditional realms. His active involvement in equities, commodities, and crypto markets, along with his deep understanding in blockchain technology, positions him as a visionary in the field of digital asset management. Today, he serves as a CEO and co-founder at Rooba Finance, a leading platform in the digital asset space, which offer comprehensive financial infrastructure, enabling the tokenization, self-custody, and trading of assets while leveraging the power of decentralized finance. Through Rooba Finance, Mr. Kazanchi is driving innovation, transparency, and regulatory compliance in the realm of tokenized real world assets. So without further delay, let's hear from Mr. Kisanchi. Sir, thank you for joining us. And I trust today's webinar will be both informative and inspiring for the viewers. So over to you, sir.
Thank you so much, Nikshay, for that wonderful introduction about me and my company. I'd also like to take out a quick moment to thank Aventel as well as Bullion World for organizing this webinar and kind of taking on the topic of tokenization head on, considering that's where a lot of financial institutions in the last 6 months have started kind of dwelling into beyond just the POC stage that we had seen over the last 1 year. And thank you so much, everyone who's taken out the time to learn about this space and see how this could benefit you, not just academically, but even practically, probably in your day-to-day businesses as well. So without further ado, I'll just quickly jump onto the presentation that I have, which will help us run over some of the broad concepts of gold tokenization and give you an idea into why this space has been picking up and why there's been a lot of institutional as well as retail interest around this space. So just before I dwell into that, I just wanted to give you a quick background about my company and how we've been dealing with tokenized assets. We've been recognized by the government of India in various forums, and we've also cleared and are involved right now in Gift City, which is a special economic zone, which is a dollar-denominated jurisdiction within India, which is there to promote innovation as well as new financial models and transactions. There's been a lot of interest there, and we got into their innovation sandbox to kind of test out where tokenization could be used. Now, in sense where we are globally, we've also been part of the ERC 3643 Association, which is basically a technology group which is working towards the global adoption of tokenized assets, but in a regulatory compliant manner as well. Nikshay has already done a quick introduction, so I'd skip that and jump straight into how gold tokenization works. Now, gold tokenization isn't all that different from how we've been looking at digitizing gold and various ways that we have digitized gold. But what we have to take into consideration is this is a new infrastructure, which brings a whole lot of efficiency, usability, transparency, as well as innovation on top of that. But to bring gold onto this new platform, it's not going to be as easy as creating a normal cryptocurrency that we've seen or bringing in permissionless tokens, because gold is a well-regulated asset which is traded globally and has had value for thousands of years, even pre-internet as well. So it's an asset that we need to deal with carefully. So how do we tokenize this gold? First, what we do is we look at a secure storage vaulting facility where this gold can be custodied and securely stored. We leverage traditional vault managers as well and have worked with, in the past, certain regulated vault managers as well, not just in India, but abroad, in trying to figure out what could be the various use cases and how they could work around custodying this gold and be a part of the gold tokenization process. But the first thing we must do is store the gold in a regulatory compliant manner with a fiduciary who can ensure that all of the stakeholders can trust the digital form of gold which is brought onto the blockchain. Now, verification is done by that trusted entity, and then they issue or mint these new tokens. Minting is the process by which you create new tokens on the blockchain. Blockchain, like you all probably are well aware, is just a distributed database. So it's basically an entry stating that X has X amount of gold, which is securely stored in a vault. So once these tokens are represented as these digital certificates of ownership, you map out the total supply, whether it's a 10 kilogram of gold, which has been tokenized, 1 kg of gold. And then there's a lot of flexibility which is offered to an issuer when they are tokenizing the gold, whether they want to denominate it in kilograms, troy ounces, or even grams. So there's a lot of flexibility during that digitization process, as long as the gold is stored in a secure custody manner as well. Now, by using blockchain, what happens is you're able to bring in stakeholder transparency as well. You're bringing in a lot of efficiency as well, and you can bring in a lot of automation of business logic. One of the things that has been spoken about a lot is the blockchain part of it. The storage, the digitization is mostly still the same that we utilize for products such as in India, you have DigiGold as well. DigiGold follows a very similar process to digitize gold. But the idea is that you want to remove some of the centralized risks or add more stakeholders to the system as well to ensure more safety and transparency of those assets as well. Now, how we had basically resorted to this was creating two scenarios. One was that we can create mine-to-market solutions, which are built on blockchain, or you could create specific solutions which are built on blockchain, depending on which stakeholder you are, whether you're a bullion bank, whether you're a refiner, whether you're a vault manager, or whether you're a miner. All of these different stakeholders can have a role to play in either building an entire ecosystem around tokenized gold, or they could utilize tokenized gold for certain use cases, such as peer-to-peer trading, borrowing, as well as just broad settlement as well. But what I will do is I'll take a minute to walk you through how an entire mine-to-market solution could look like on the blockchain as well. And a lot of people have actually started working towards creating an entire mine-to-market solution to ensure there is a lot of integrity in the supply chain as well, and to kind of deal with the gray gold and the green gold issues which are still there in the market as well. So if you had to look at it from an ecosystem, first, what would happen is the miner would be responsible for registering the gold doré and its various properties on that tokenized format. What is the gold? Where has it been mined from? Has it been mined sustainably? And so on. Then what happens is the refiner would essentially check the packaging and ensure that both manually as well as AI or IoT systems are utilized to ensure that there's no tracking, there's no transparency issues, there are no tampering issues as well. And what the hallmarking has been provided is continuously respected throughout the value chain as well. Various bullion banks then can step into the system and purchase directly from the refiner as well. And the vault manager would verify and custody the physical underlying and ensure that, let's say, if I have transferred it to Mr. Sharma, then Mr. Sharma and my transfer would be recorded on chain, and the vault manager would note that transfer has taken place and instantly settle and transfer the ownership as well. Now, we provide a whole stack solution to this, or what we do is we also create custom transactions for different people to participate, whether it's a peer-to-peer transaction directly between a refiner or a bullion bank, or whether it is a transaction between two traders as well. All of these transactions can be created or recreated on the blockchain as well if you decide to tokenize this gold. But before tokenizing, you would want to know what are the benefits essentially to a person who owns this gold as well, or to an issuer of these gold tokens as well. One is that you get clear supply chain authentication and management. Using blockchain technology, you can enhance the transparency, the traceability, the security, as well as the efficiency, because all of the stakeholders involved in the transaction typically are going to be put on to the blockchain. They would be able to view this in real time. They would be able to see what all trades are being made by who all, and what is the current state of ownership of these digital tokens as well. Not just that, you could also create new utility for these gold tokens, which were previously either too expensive to carry out or their physical equivalents had a lot of risk in the system. For example, decentralized finance, which is basically intermediary-less finance, which depends on technology to execute certain business logic, which is, let's say I was borrowing or I had $1,000 of gold. Now, traditionally, what I would do is I would go to a person who would provide a loan against this. I would get a certain LTV ratio, and then I would start making the repayments. If I default on the payments, there will be a certain amount of delay. Then the person who's provided me the loan would liquidate that position and then sell that gold. These processes are typically done manually. It's a little bit cumbersome. It involves chasing down the borrower as well. And it is a little difficult to automate a lot of these processes, including collection, if you would try to do this without smart contracts. But when you utilize smart contracts, which is basically technology converting if and then scenario into automated business logic. So how this transaction would play is, if I have $1,000 worth of gold, I can submit it into this contract, which would allow for someone to be matched with me who could provide a loan, let's say against 80% of the loan to value ratio in this particular instance. And I would be able to borrow the money, and the lender would have the surety that in case I default on my payment, the liquidation is automated through these smart contracts, and I can take custody of the gold tokens. Now, because I'm doing all of this from a digital format, I don't need to worry about the underlying, which is securely stored with a vault manager. I don't need to worry about the terms of the loan because that has been automated and signed by both parties. I can immediately jump into getting the whole part executed and safekeep the collateral against any defaulted loan as well. The other thing is that because blockchain is by in itself, at least public blockchains are by in itself distributed across the world through their nodes and allow for global participation, I am able to leverage this global distributed infrastructure to issue tokens and globally distribute them subject to regulations as well. Now, even the regulator has significant amount of benefits, whether it is a local regulator or whether it's a regulator which is interested in seeing how their jurisdiction is interacting with various new digital securities as well. So the regulator over here would be able to track down the transactions through this immutable record, can see when certain transactions were made, whether those transactions were problematic or not as well. Now, for investors, because I have these opportunities of yield generation out of these digital tokens, I am able to participate in new age products such as liquidity pools, which is basically a whole variety of investors who are coming to pool in their digital tokens to meet the needs of large borrowers. Say there are 10 people on this platform owning tokenized gold. All 10 of us could submit our tokens of varying amounts and submit it into one large pool, which one institution could come and borrow for and provide interest to all of the people who have deposited these tokens as well. The 24/7 capabilities of blockchain has been seen by us over the last couple of years, not just in traditional financial assets which are being tokenized slowly, steadily, but also through the cryptocurrency revolution where trading happens almost 24/7 without any problems in the infrastructure. Now, with this digital form of gold, you're able to get liquidity faster, not just from the participants on that particular platform, but you're also able to tap into global exchanges where these tokens are offered and sold in a regulated manner. You're also assured of the quality because in this case, you aren't worried about a centralized or a single person who is acting to issue out these gold tokens, and you're dependent on the infrastructure and the information which is provided by them. In a blockchain-based infrastructure, because it's distributed, because you have all of the various stakeholders viewing the same data in real time, the investor is also protected and is assured of the quality of the gold tokens which are being traded on the ecosystem as well. Before I go into the various things that you can do using a blockchain-based stack, I just wanted to take you through what an issuance process on our platform would look like so that you can essentially see how an issuance on the blockchain works. If you would just allow me a quick second to share that screen. In case any of you have any questions, you can leave it in the chat. I'll be happy to take them up one by one as well. So this is essentially from a technology perspective or a product perspective, how you would go about tokenizing gold using various different gold tokenization service providers, which are out there today. Now, essentially what you would go about doing is you would select the mint new token option over here. Then you would, after that, go and provide the various details of the token. Let's say the issuer is a certain refinery which wants the token to be associated with that refinery itself, they would be able to add more details, would be able to provide the token description, would be able to say where the gold is actually stored, provide the website as well as the logo for these gold tokens which they're planning to issue. The next set is there'll be certain amount of token documentation. Now, this documentation takes into consideration various regulations, and most service providers today who offer tokenized services have to be conscious of making sure that they are dealing with the various regulations, depending on which state, which country you are issuing these tokens from. So what we do is we ensure that a lot of documents are taken, whether it is where the vault manager is, where the location of these gold tokens are they LBMA approved? And more importantly, if you see, there's an auth code verification. Now, this is one of the methods that tokenization service providers such as ourselves ensure that, okay, the vault manager who has received the gold is the only person who is allowed to tell us how much gold they have received and what is the quantity, quality. So when they enter the depository receipt or the vaulting confirmation, that is the step by which we get a confirmation that, yes, this gold is legitimate, this gold is conflict free, and yes, this gold is ready to be tokenized as well and stored safely. We can also select various auditors, and the person who is tokenizing this gold can even submit conflict reports or ESG reports as the case may be. You're also allowed to put in your bullion number as well, the serial number of your bullion, the purity which is as well there, and any other certification which can be provided by the issuer as well. You can then decide very flexibly what are the token terms that you want to issue. Now, before I go into the token terms, there are a couple of different gold tokens which exist out there. And the basic separation is what are the token terms or what are these tokens capable of doing, which separates them. Today, we have players such as Paxos, which is a crypto native player, which provides infrastructure to tokenize gold. But what Paxos does is it provides it on an ERC20 infrastructure. ERC20 are typically permissionless tokens, where you can transfer these tokens without any restrictions or rules or KYC requirements as well. But as the industry matured, newer forms of security tokens started emerging, and we realized that those thresholds or those KYC modules or security regulations could be encoded at a token level as well. And that's what we at Rooba Finance do. Any token issuance that goes through our platform is done so in a regulatory compliant manner with documentation and to ensure flexibility to offer various kinds of permutation combinations of tokens. For example, you would have heard that HSBC has also tokenized gold very recently in Hong Kong. Those gold tokens are very, very different from the gold tokens that, let's say, a Paxos has issued. In this particular case, HSBC has issued it on their own private blockchain. So HSBC can only offer this to a limited set of HSBC customers as well. And they are not allowing redemption of those tokens against physical gold. You can only buy and sell those tokens as of today's date. So it is these flexible terms, whether it's a permissionless ecosystem or whether it is a permissioned ecosystem, these token terms allow us to ensure that there's a lot of dynamic nature to these tokens, and you can do a lot more, which you couldn't do previously with, say, a DigiGold or any other form of digital gold-based platform which is trading. In this, you can decide whether you want investor eligibility to only apply to institutions, whether you want to block primary and secondary trading as well, what should be the weight per token, whether there are any jurisdictions that you would essentially like to prevent as well from investing in these tokens. You could select that so that at the KYC stage, any person from those jurisdictions would be prevented from investing as well. Then you would be able to review a token issuance, see what is all of the data available over there. And you can have the flexibility of buying these tokens either through fiat-based transactions, UPI, or even cryptocurrencies as well, depending on which jurisdiction you're operating from, what are the regulations, whether you're allowed to use cryptocurrencies to make such transactions. On the basis of that, we enable these payment options. And after that, the token gets created and is ready to be distributed to your investors as well. So that's a quick process of how tokenization at least works from a technology perspective, from a product perspective. But what the impact is essentially is you have created these tokens which are now available for anyone around the globe to trade on a distributed ledger, which is immutable, which allows for new yield creation opportunities, whether you want to lend these tokens out, whether you want to lease them out, whether you want to do collateralized borrowing as well. A lot of operation and a lot of unique use cases start emerging when you decide to tokenize gold as well. Now, what I'll do is I'll just quickly go back to the presentation as well. But just in case anyone has any questions right now, I'd be happy to answer them.
So before we go further, I just want to ask, like, how does the tokens differ from digital gold? Like, how exactly does it differ?
Absolutely. The first difference is going to be on the technology stack. Most digital gold products are created on private databases, or in certain cases, even private blockchains. Now, where it's a private blockchain, the differences start reducing, but where it's on a private database, what happens is there is a centralization risk. The information that is coming from the DigiGold provider is the only information that you're able to rely on. Sometimes DigiGold providers also partner with various vault managers. In that situation, the trust that is there on the infrastructure is much higher. But where blockchain-based assets or tokenized gold beats DigiGold is primarily around the innovation and the utilization or the ability to utilize these gold tokens in decentralized finance applications as well, which create new yield-bearing opportunities on your gold, which puts your gold to use in such a way that it wasn't possible before. Because automation of business logic is something that smart contracts does extremely well as a side impact of you basically utilizing blockchain for the infrastructure utilization.
Right. So I think in chat box we have a few questions. So
Absolutely.
there is a question. Can you explain how tokens derive legal value? If gold is stored in India, how can a foreign investor invest and redeem?
Now, the foreign investor in terms of investment and redemption, now, since you've taken an India specific example, now with India, tokenized gold is still a gray area. It falls into a very similar category as DigiGold in that sense. But the problem is that the process of tokenizing gold is the exact same regime and very similar to the electronic gold receipt in mainland India or the bullion depository receipt in IFSCA as well. So in India specifically, there are still some problems which we would encounter in terms of offering these tokens to foreign investors, which is one of the reasons why you don't see a tokenized gold product, which is currently in mass utilization in India beyond POC stages at this point of time. But the gold tokens would derive their value simply because of the underlying, which is stored with the vault manager. As long as the underlying is protected, the digital gold tokens in itself do not have value. They are a mere representation of a claim which is present with the vault manager. So that is how it derives its legal value per se. But it is not a standalone token, which if the token gets lost, you lose out on the value of gold. So if the token does get lost, it can be either redeemed, it can be reminted as well.
Can I ask this again? How is pricing around?
Sorry.
Yeah. So one more question is like, okay, so how is the pricing arrived at, and what is the bid and ask spread? When we talk about Indian context, does the price include import duty component as well? That is the question.
Yes, in India, we would have to typically take all of the prices which are into consideration. There is also an issue around GST, which is present as well on gold tokens, which hasn't been resolved in terms of legally and taxation wise. So there are certain things. So what would happen is we would input, at least on a conservative basis, the token price to include all of these various charges which are levied, and then offer these tokens as well. So there would be a slight premium on these tokens, at least on face value as well. In terms of in India right now, there is still a long way to go in from a regulatory compliant manner, because DigiGold is still unregulated. DigiGold is still being offered, though RBI and SEBI both had kind of stepped into the DigiGold space to kind of clarify that it is still unregulated. There have been no regulations to fill in the gap, at least so far.
So one of participants want to know more about the Gift City Association, and They're asking if it is traded and settled in US dollars.
Absolutely. I'm pretty sure you would be aware in terms of what's happening in Gift City. So in Gift City, we're not part of an association in Gift City. We're part of the ERC 3643 Association, which is based in Luxembourg. In Gift City, what we are doing is we've gotten into the innovation sandbox, which has been provided by EFSCA. Our application was cleared and we're now being regulated under the sandbox framework to test out the issuance of tokenized assets. First, we're looking at funds at this point of time. So those fund units, once we tokenize them, would be traded in US dollars. But as of now, the tokenized gold offering is not something that we're working on in Gift City.
One more question is, which token standard do you follow, if not ERC 20?
Absolutely. So we follow the ERC 3643 token standard. Now, the ERC 3643 token standard was basically introduced by a company called Tokeny in the initial days. It came up as an EIP or an Ethereum improvement proposal because we found out that there were gaps. If you had created permissionless tokens, it would create a situation where these tokens could be traded and flouting both domestic regulations as well as international regulations, because the idea was that if it is trading as a security, how can this breach the security regulations just because of the nature of it being a digital token? So what we did is we utilized the ERC 3643 standard, which is now the Ethereum, which is now in fact an official standard to tokenize assets according to the entire Ethereum community as well. So we utilize that standard. That allows us to input KYC, KYB, and creation of a persona called a transfer agent, which ensures that certain trade terms are met before they can execute those terms. Now, suppose if there are some law enforcement action which has to be done, we have seen that in cryptocurrencies, it becomes next to impossible to freeze wallets or reverse transactions. ERC 3643 as a token standard allows us to freeze transactions, allows us to reverse back these transactions and mint new tokens as well, depending on the need and the case at that point of time. But yes, we utilize the ERC 3643 token standard for tokenizing assets.
Yes, I think that is it as of now. Maybe further questions will take post your presentation, sir. Yeah.
Absolutely.
Yeah.
So now, since we've covered the gold token bit, I wanted to jump into some of the reasons why people are looking at tokenized assets so interestingly. You would have seen large financial institutions just in the last few months launch their own tokenized funds, were able to successfully raise almost $300 million plus in just about a week for these tokenized assets. But why is this so interesting when you could do all of this so far on a digital infrastructure in various other formats? The idea was that innovation on these particular new age infrastructure was just too compelling to look away from. And some of those compelling innovations were, for example, automated market makers. Now, what automated market makers did was it was an innovation which allowed for various people to kind of ditch the old order book method and utilize a mathematical algorithm, which is the Black-Scholes method, to essentially determine the price of a particular asset based on the liquidity in that pool. And you could essentially create a new market or become a market maker using code. All you would have to do is you would get the gold tokens and you would create trading pairs on that. And you would allow for orders to be satisfied or perform the role of a market maker without actually doing the actions yourself and putting business logic on top of that to do these trading for yourself. If any of you are aware of decentralized exchanges like Uniswap, they actually utilize this technology of automated market makers to trade cryptocurrencies to find out the prices of those tokens. But what we did in Rooba Finances, we found out a way to utilize automated market makers for various real world assets as well, so that the dependency on market makers is actually reduced, as well as provide traditional market makers newer age technology to actually utilize and create more efficiencies in their market making process as well. Blockchain also enables peer-to-peer trading in the lowest cost format as well as in the safest format possible as well. You can create a request for quote on the market where you could set your individual price and immediately be matched whenever another peer-to-peer trade picks up on that part. You could also run an entire spot exchange today on blockchain as well, depending on the throughput, depending on the volume of the exchange. Yes, there are scalability issues, but given the kind of innovation as well as the fast settlement that happens, different people would have different use cases for using this as a spot exchange as well. You can also create specific lending and borrowing pools where, let's say that if you were a group of retail traders with, let's say, 100 grams of gold, you could actually pool in those 100 grams of gold and create larger quantities of gold, which could be then lent out to a single borrower. And all of the other investors who actually provided that gold can actually be secured in the same way, in the same terms, or in various flexible terms based on their contribution towards that loan. And be assured that in case there is a default, there's automated liquidation of that gold position or the collateral, and they are safe, and their position is safe kept. Apart from this, there are various gold leasing schemes. You would have seen projects like Gullak in India, or various gold leasing projects which actually happen on a very informal basis today as well in the gold market. You could create gold leasing structures and automate those terms as well on the blockchain and allow for people to utilize these gold tokens in various ways which were impossible for them to do earlier, given the limitations of the technology at that point of time. Now, the regulations is something which is always a concern, which has been a big point of contention as well in the industry, because what has happened is there were players who took advantage of the regulatory arbitrage, which early adoption in this space actually created. For example, Tether would be a great example of how they initially utilized regulatory arbitrages in countries where crypto was either unregulated or loosely regulated to come out with various products such as USDT or their own version of a token of gold, which is Tether Gold. But the problem is that this was a jurisdiction-specific play, which then evolved into an international play. And at this point of time, Tether is too big to fail for the crypto industry to actually go and regulate it very hard. Now, given what had happened with Tether, a lot of jurisdictions actually woke up to understanding that, okay, this is actually not just a cryptocurrency. What Tether offers is a form of tokenized dollar. How do we regulate these tokenized real world assets became the question from 2017 to 2021. And that is where a lot of jurisdictions came out with their own rules and regulations for digital assets. Some of them were wide sweeping in terms of bans, and some of them brought a lot of nuance. Where tokenized gold can actually be introduced and can actually be explored meaningfully, not just from a POC stage, is countries like the United States, the United Kingdom, UAE, Switzerland, EU, Singapore, as well as Hong Kong as a specific jurisdiction as well, which has recently come out with new regulations around tokenized instruments. But the broad principle that all jurisdictions have followed is that if you are tokenizing an asset, it does not change the legal compliances of those assets. In fact, in certain cases, it may make it even more onerous or more robust, but there is no dilution of compliance which happens. So the same rules and regulations which apply for the underlying is essentially the rules which are carried forward on the DLT-based stack. There are a few jurisdictions which have tried to bring in more nuance and said that, okay, because now you have more stakeholders on the blockchain which can actually verify these transactions, can we start automating a certain set of compliances which were earlier manual? Switzerland, Singapore have actually jumped towards doing that as well and have gone towards native issuances of these tokens as well, which brings in a whole lot of development around this industry as well. But to issue gold tokens, the idea is that you must follow the regulations which are concerning the underlying. And because you have changed the nature of the gold which is being traded does not change the nature of the regulations. However, the countries which have introduced specific regulations around tokenized gold, or I mean tokenized assets, such as Singapore, Switzerland, and the EU through the MiCA regulations, those create a great window of opportunity for tokenized gold players to step up and actually issue regulatory compliant gold tokens and distribute them worldwide. Now, Tether, now certain structures that various people have utilized to bypass regulations or to give comfort to the regulator is, for example, Paxos is structured as a regulated trust under the New York rules as well. So they have certain onerous responsibilities when it comes to making sure that they're doing compliance checks. Does that create a situation where all regulation and investor protection is necessarily met with? It does not, but it is definitely a step up from various other gold tokenized providers who aren't complying with any of the regulations or who aren't securely custodying the underlying gold as well. But to reiterate, the principle to follow is that changing the characteristics of the asset does not change the need or does not change the compliances of that asset. You must follow the same compliances that were there for their asset in its physical form as it was in its digital form. Now, what we have noticed since working in this space for about last 4 years, we've had long conversations with various miners, with various refiners, market makers, bullion dealers, both internationally and domestically, vault managers as well, that the technology does offer superior products, but until and unless you're able to create and carve out these products and distribute it to the market will not be able to tell the benefits. So what we have done is we have created various products in our own arsenal to ensure that, yes, when we do tokenize gold, there are products which have unique use cases which the market could immediately get. And that is what has to be the focus, that yes, they're going to be regulated in a certain way because of the use cases which are attached to it. Tokenizing gold in itself is just a database entry at the end of the day. The utilization of that database entry in the form of trade, payments, derivatives, or asset-backed instruments is where the regulator would look at these instruments on a case-to-case basis. And sometimes you would need to get regulatory approval either via innovation or either via sandboxes or applying to the regulator on a case-to-case basis, seeking informal guidances as well. Because right now the space is unregulated as of now, but that does not mean that the regulator does not look at tokenized gold or tokenized products in a favorable manner, as long as you can ensure that you're meeting all of the regulatory compliances for the underlying, as well as you're ensuring that there is investor protection built in, you're ensuring KYC, KYB, AML checks, and ensuring that any new product does not have any systemic risk to any of uh, the economy or the platform or the financial markets that you're doing to as well. So there is obviously digital gold, which could be used. It's a newer form of digital gold and a newer infrastructure where you can basically create yield-bearing digital gold tokens as well, which would separate you from the traditional gold tokens which are available today. Now, what you can also do is physical gold delivery. Like I mentioned, because this is a cross-border platform, because people around the world can participate in it. You could have a vault manager in Switzerland and a vault manager in Singapore, which could essentially do an intercustodial swap using these gold tokens and take delivery in their home country as well, which would reduce shipping, insurance, and a whole lot of added costs which are there present as well. You could also gift these tokens as well. These tokens could be utilized as gifts across the world in a form very similar to remittances as well. Gold leasing is one of the products which has gotten a lot of traction and a lot of interest from the market as well, because any form that we could create safe yield-bearing gold tokens was what the industry was asking for a long time. And that's where we had focused on in some of our initial product offerings. But that is basically how gold tokenization works. It's no rocket science. It's basically the vault manager stores the gold. You use a proprietary software, either one of ours or any of the competitors which are out there, to ensure that provenance of that gold is maintained from the real world or the off-chain world, from the vault manager onto the blockchain, to ensure that, yes, we have received this gold in a safe, secure manner. It's actually stored independently. And then after that, you create digital gold tokens. You put in certain custom built rules, whether it's KYC compliance, KYB compliance, AML checks, tax regulations, restrictions in sale of that particular gold. You can input that at a core level on the token, and then you would be able to prevent or enable newer use cases as well. So it's just moving it onto a newer infrastructure and adding a set of features to it. From a regulatory perspective, at least in India, physical asset-backed virtual digital assets was excluded from the regime of 30% tax as well as the 1% TDS. But that does not mean that this digital gold would be free from any of the other taxations which are currently there on a digital gold product as well. And just one second. If any of you have any questions, would be happy to answer them at this point.
If any of you have any questions, please raise your hand so that we can permit from our end so that you can unmute and ask the question directly. Sir, if I may ask one question to you, sir. So
Yeah.
what would be the cost of generating, and issuing and managing these tokens? Like if you could just give an idea about the economics around it.
Absolutely. One of the benefits of this infrastructure is that once these tokens are actually issued and minted, the cost of managing and maintaining the system is almost negligible in the traditional sense, because then to keep the infrastructure running, because it's a publicly supported infrastructure with various use cases, each person doesn't have to manage the infrastructure. Once you issue these tokens, they can be stored digitally by the investor, and you could hold them on for as long as you want. The transaction costs which are involved are there, but given the scalability of blockchain now using layer 2 solutions or scaling solutions for that blockchain, you're essentially able to reduce the cost of transaction as well. So the initial cost is there in the infrastructure creation and the setup, because that would be dependent on how various other financial institutions would want to issue these tokens, what rules they would have. But that is an initial cost which gets covered up in the operational efficiencies which are carried on in the product. But the idea is that there would be a one-time payment for deploying the system, either connecting to a service provider like ours or utilizing a service provider like ours to create an entire white label solution for distribution. Because there are various ways that people have chosen to deploy gold tokens. Essentially, one is you white label solutions and you utilize them under your own name. For example, a bank like HSBC would utilize a white label solution provided by a technology provider so that they can issue these gold tokens to their own network and to their own customers. Then there are issuers such as Paxos, which will issue these gold tokens universally and to any person who would be interested in buying them. And they do this on a public blockchain. So depending on the method of deployment, the utilization, the needs of the customer, the initial cost to build and operate the system would vary. But once the system is built and it starts operating, the costs are very, very low.
Right, so thank you. So there is a question in chat box, sir. Is TCS applicable on purchase of tokens like cryptos?
No. So the thing is, the government of India, when they came out with the taxation circular, they basically followed the same onerous tax which is there on gambling, because the idea was, or the legislative intent behind that was, that this seems like something which is gambling. There is no underlying value that we can ascribe to it, given our best understanding of this industry, even though there is value to various cryptocurrencies and blockchains. For example, Ethereum is a blockchain which sells a commodity, which is known as block space. And for that block space to be kept viable and open, you have an incentive mechanism called Ether, which allows you to maintain and trust that block space so that you can keep the infrastructure running. But at that point of time, the government stance was there was nothing backing these cryptocurrencies. So what they stated was any asset-backed token essentially would form an exemption to the tax collected at source for these kind of tokens or for these asset-backed tokens. But any cryptocurrency, they would still apply. So I think the question is for now the regulatory authority for tokens in India. Now there is still a jurisdictional battle between RBI as well as SEBI. As you would have noticed, RBI wants to take a stance of not wanting to regulate these instruments at all and rather take an outright ban or preventing people from buying. SEBI has now taken a more nuanced stance where they said that we would like to actually regulate a lot of these cryptocurrency products. But because of the fractured nature and mandate of the regulators, which is RBI, SEBI, what happens is that IFSCA becomes a very interesting jurisdiction in Gift City because they have the delegated powers of all of these different regulators and it operates as a single form of approval. There is no one regulator which can unfortunately regulate these cryptocurrencies or these tokens. But what they can do is they can set and regulate the various intermediaries, such as ourselves or players such as CoinSwitch or CoinDCX, to act in a certain manner. That is where the regulator can step in. And for that, that relevant regulator, in my humble opinion, should be SEBI and not the RBI, even though it does concern a certain amount of money movement. But right now, IFSCA is one of the best regulators in India to explore this technology as well. And they have followed a similar model, such as the Monetary Authority of Singapore, which is the regulator there for their tokens and their tokenized industry as well. And the Monetary Authority of Singapore has taken a leap forward that a lot of other regulators are now trying to catch up with on the tokenized asset front. Now, if the underlying gold is stolen or damaged, that would basically come back down to an insurance contract, which would be either the vault manager is indemnifying the token holder of that part, or there would be an insurance contract between the vault manager, the investor, as well as the insurance provider as well. Now, but this would basically fall onto the vault manager's set of fiduciary responsibilities and requirements and the insurance provider for that particular gold. And if the gold is stolen or damaged, these tokens would be frozen until and unless the underlying at that point of time can be either traced back or replaced to its original form. So we would prevent the trading of those specific gold tokens associated with those specific gold bars, which have been prevented, so that there is no double spend of this gold. We don't want the gold being traded outside at a separate cost, and these tokens also being traded, which would create a messy situation. So that's how we would do it. As far as I know, I'm not sure of the cost of 100 grams of gold in Gift City per se, but what I do remember is Gift City offers the lowest rates for gold storage and is actually trying to be very competitive in terms of the gold storage prices as well. If I last remember, they were almost down to zero as well, because the mandate is that we want to become a price taker for gold rather than a price setter, and we want a lot of storage to happen in India as well. So we deal with both allocated as well as unallocated gold. We allow for the issuer to decide whether he wants it to be an allocated or an unallocated gold issuance, and where the vault is essentially going to be would be specified on the token issuance documents as well. And that would be re-verified by showing by the vault manager who has that gold under their vault. They would have to confirm to us that yes, via the code that I showcased to you, that they actually have the gold. Yes, there is definitely use cases for gold tokens in running a gold accumulation scheme. We had actually kind of done a brainstorming session with certain members from IPCHA as well during the initial days, almost 2 years back, on how this could work out. But unfortunately, at that point of time, the crypto winter had set in and people were a little skeptical about trying to jump into newer use cases. But yes, that's definitely something which could be done, because not only could you run the accumulation down to very, very small amounts, but the tracking and the tracing of that accumulation also becomes very, very transparent as well. Yes, the gold bars, if they are allocated, you would get the specific serial numbers, you would get all the documentation also, which is associated with that particular gold bar. And you would have to actually put that up. If you do choose to issue allocated gold, there is a separate set of documents that you would have to upload as well. And if it's unallocated gold, similarly as well. Yes, not just in the future, Jalesh. Right now, Tether Gold, which is one of the companies which offers gold tokenization products, as well as Paxos Gold, actually does offer you the ability to convert this into physical gold and take delivery. Tether provides the delivery in Switzerland, and Paxos, if I'm not wrong, provides the delivery in the United States. But what they have done is they have set the redemption amount to be quite high. For example, on Tether, if I'm not mistaken, it's $500,000 worth of gold is when they allow you to redeem it, and the redemption is also done at a cost of almost 1% gold value as well. But you can redeem it as of today. But for example, HSBC's tokenized gold product cannot be redeemed right now in Hong Kong as well. So there are differences in regulations, there are a little more nuances and differences in products that various people are offering currently. At present, unfortunately, commercial banks do not take gold tokens as collateral. The biggest problem being that the definition is still not out there for tokenized products, which is one of the reasons why the International Financial Services Center Authority, or IFSCA, in Gift City has actually created a high-level committee for tokenization to come out with these definitions and enable banks and other financial intermediaries to use these products more meaningfully as well. But from a technology perspective, yes, we have built out use cases where these gold tokens can be utilized as collateral, and that collateral could also be automated further to be used in various business functions as well. Yes, the cost of Paxos is high. That indeed is true, Bridge. But are you talking about the price of the particular token, or are you talking about the transaction fee? Because there are two reasons for both. If you could just specify on the cost, as in the cost of the transaction, or Paxos's per unit cost for the gold. So in case it is the cost of the token, that is because Paxos and most tokenized gold providers actually do charge a premium on their gold, because they're saying is that if we can transfer this asset in a free manner, if we can generate yield on these assets, and if I can walk around with this tokenized gold in my pocket, which is almost censorship resistance, there is an additional value to this particular form of gold rather than the traditional form of gold, and therefore they charge at a spread or at a premium of $2 to $3 as well. And actually, that is where a lot of the revenue for tokenized gold providers actually comes from. They charge a higher value of that per price of gold, and they arbitrage the spot market differences with the tokenized gold differences and create their operation. A lot of them run it as a balance sheet activity, but Rooba Finance just provides the technology for you to decide whether you would like to run it at a higher cost or not. At present, to commercial, yes, a BDR can essentially be tokenized very easily. We actually have the platform to do that today, because we realized, because our process was in line with EGR and BDR, we thought, why not, keep the whole process going so that when there is clarity, we can tokenize BDRs as well. But at this point of time, it's being done on a case-to-case basis, on an asset-to-asset basis in Gift City. Token providers in Gift City, they're basically right now what is happening in Gift City is there aren't broad token providers. There are use cases which are being presented by token providers such as Rooba Finance, where we've come in and said that, okay, we can tokenize real estate, commodities, private equity funds, private debt funds, in either Cat 1, Cat 2. So we went with that format, and they have given us the mandate to allow us to issue fund units. But if we were to do tokenized gold as well within the sandbox, that would go as a separate application. Currently, us and Terrazzo are the only players in the Gift City sandbox which are doing tokenized assets. Terrazzo is selling their own assets, which is part of a larger real estate group. And we are tokenizing assets on behalf of all forms of issuers as well in Gift City. So right now, it's the two of us in India. Security-wise, these tokens are extremely safe. The blockchain provides a great security features, great immutability around it as well. And because these aren't cryptocurrencies, even if they are hacked, when a proper case is made out to and the information is provided to us as a service provider, we can enable those tokens to be frozen and returned back to the original wallet. These tokens cannot be transferred to people who are not KYC'd, KYB'd, or have an on-chain ID which has been created by us as a tokenized service provider. So from a security perspective, it's extremely safe. And even if, God forbid, there is a hypothetical or an academic hack of these tokens, we could immediately burn those tokens and mint new ones to the affected party, or carry out any law enforcement action and freeze the wallet on behalf of, if there's either a court order, a legal notice, etc. Yes. In the end, the idea is that you would be able to provide an option to buy physical gold from a specific refiner or mint. That would depend on the number of people that we overall start to onboard onto our platform, because we are in talks with some large refiners, not just in India, in South Africa, in Dubai as well. And we're basically considering an entire mine to market solution. And as more refiners come on board as well, you would be able to choose which refiner you want to take the tokens from. You can either then choose, let's say you want delivery in Switzerland and you want to buy, let's say tomorrow, if let's say Valcambi comes and issues 4 tokens on our platform and it is only redeemable in Switzerland and you live in Switzerland, you would prefer taking the Valcambi gold than, let's say, hypothetically, a Rand refinery, which is issuing it in South Africa and providing delivery just in South Africa as well. But the end user would have the option to buy the physical gold from a specific mint as well, or redeem it against a specific issue. You'd mentioned about the spread as well. Now, the spread would basically depend on who is floating these tokens and at what price, because we do allow for an on-chain premium to be added. Let's say, and there was another follow-up question, which I think we missed out on, which was how is the price of gold ascertained on these platforms? So the price of gold is ascertained through various ways. We have APIs which connect us with various data feeds, which are utilized by large exchanges. And we also utilize services such as Chainlink, which provide on-chain price information, which is collected from from global sources, which are well-vetted, LME, etc. So we're able to get real-time pricing as well on our tokens during the trade of those tokens. And because we're able to get that real-time price feed, and when a tokenized issuer comes out with their own token, they can actually decide to list it at a premium or not. And they would be able to manage the spread basis their own flexibilities and how they choose to manage the issuance price as well. Thank you so much, Yash.
So any further questions?
I personally see the future of gold tokens to be very, very bright in India, because at this point of time, large giants like Invesco, Apex Group, BlackRock, they're all pushing forward with tokenized assets, tokenized instruments, as well as they're looking at how could they tokenize public market infrastructure, such as gold ETFs as well. So I personally see the future of gold tokens to be very bright in India. DigiGold seems like the low-hanging fruit, which would start moving on to public blockchains, as well as from my understanding, they are already testing going out on private blockchains. But the limitations of private blockchains are there, and we do see a very, very bright future for gold tokens in India and tokenized assets as a whole as well. But yes, it's a pretty bright and interesting future, and with regulations now coming daily, with more nuance coming from the regulator, from the finance ministry as well, and realizing that India is not just a development powerhouse, but also a financial powerhouse when it comes to interesting assets, but people need access to those assets as well. So I feel that it's a very, very bright future. The regulator is actually facilitating organized growth as per my understanding, because the regulator, the SEBI chairman had a very wonderful example, which is fintechs often create an Abhimanyu complex where investors are allowed to come in, but the investor doesn't know how to navigate and go out, which is one of the reasons why the government of India has been very focused on controlling the infrastructure and allowing for players to build on top of their infrastructure. And if you see recently, the Bank of International Settlements has actually authored a paper, which Mr. Nandan Nilekani also was a large contributor to, which has spoken about the Finternet. And interestingly, the Finternet is taking the learnings from Aadhaar, UPI, and the digital India stack, and seeing how could that globally work on a tokenized asset stack as well. So in the future, we see a lot of interesting developments coming. Absolutely. There should definitely be more queries and research around tokenization and scope. Yeah. Yes, a lot of our issuers had actually asked for us to allow them to incorporate their ESG compliances, their ESG notes, their conflict reports as well. So in the demo that I was showing you of our platform, we actually allow them to upload all of those documents as well, and we can encode and show case which tokens are green gold, which tokens are gray gold, which tokens are compliant, non-compliant, which tokens have complied with ESG as well. And with taxonomy as a whole coming up as well, there are a lot of ways to index good actions which are conducted by these issuers as well and reflect that. Because from our understanding, people actually do want to own green gold, and they don't mind paying that extra premium if they're getting headache-free gold in that sense. Yes, there is a little bit of unfortunate policy paralysis in that sense, but we do believe that there will be a change with IFSCA at least. And the growth of IIBX in IFSCA has just been a great example, the kind of innovation, kind of pushes that they've been doing, kind of partnerships and products that have been slowly coming out. We really do see the interest right now to look at tokenized assets meaningfully coming from the regulator as well. But the unified regulator piece is definitely something which will have to be looked at from a mainland perspective, because Gift City alone would not be able to solve all of the issues. And eventually, having a unified financial services regulator or a model like the Monetary Authority of Singapore is a great model for us to follow if we are to, increase the ease of doing business as well.
Sir, I think one question we missed out on one question. So, are there any limits and limitations in tokens? He's asking from the point of view or quantity, minimum or maximum limits.
So, in terms of minimum maximum limits to tokenize the asset, we do create minimum thresholds for people to bring in a certain amount of bullion, because the problem is that if we are to deploy this technology for large players, it is a little expensive during the initial days. So the issuance size that we look for typically is larger. But in theory, you could come and tokenize, let's say, even a 10-gram bar of gold, as long as there is a wallet who's willing to hold it in for you as well. And then we could tokenize even 10 grams of gold and distribute those 10 grams of gold, 1 gram tokens to all of your relatives as well. In theory, you can tokenize even the smallest amount of gold, as long as you're following the standard operating procedure, which is store the gold in a wallet manager. The wallet manager independently communicates to the technology platform that, yes, they have stored this gold. It has been kept as part of a tripartite agreement between the issuer, the tokenizer, as well as the wallet manager, so that whereas the tokens exist, the gold cannot be pulled out. As long as you follow that basic chain, you can, in theory, tokenize 1 gram, even 0.1 gram of gold, as long as you can find someone who can custody that for you.
I think that is it, sir. Sir, anything from your end? Anything more?
This definitely covers the initial parts, but what we can definitely do is we can set up more calls as well, or kind of, in case anyone wants to get in touch with me, I can leave my contact details and my email ID as well. We could go into more details on the tokenized DeFi part, because that is where a lot of exciting innovation right now is coming, which could disrupt the way gold is been traded for generations at this point of time. So there's a lot of interesting stuff happening. My emails, my phone numbers, I'm just leaving it there. In case anyone feels like getting in touch with me for any more questions, I'd be happy to answer them.
Nikshep, can I speak for a minute?
Yes, please. Please.
Arjun, I am Srivatsava here.
Yes.
It was wonderful. You made it so interesting with a brief presentation, but a very interactive Q&A session. And I could see, despite having only 20-25 people, the amount of interest in this subject. And you have, very openly and candidly mentioned what is the current status and where is the opportunity. I take your idea. We need to do more awareness in this. We will work on this. Maybe we should start because we are recording this. We will send it to as many people as possible, so that those who have missed out for many reasons can take the benefit of this. And also maybe that we would have a 3-part or a 4-part article in Bullion World as a follow-up. And we will do our bit in terms of popularizing this concept and the technology aspect and the strong underlying fundamentals for the need of such a product. So thank you so much. I would say thanks a lot. When you came to our office, unfortunately, I was on tour and I could not meet you. So thank you very much. It was long overdue and this could happen today. I am so happy. And I'm so happy that you have made an excellent presentation, and those who have stood here today, they all got benefited. I'm sure many more will get benefited as this concept spreads.
Absolutely.
Thank you so much.
Absolutely.
Thank you.
Thank you so much, everyone.
Over to you.
Thank you.
Yeah.
Thank you so much, Srivastava, for the very, very kind words as well. Would definitely love to meet you in person as well over the coming weeks when we do
Thank you
get
very
time.
much. Thank you.
And I'm open to the definitely writing a four-part series as well on this. I'll share that across with you as well.
Sure,
And in case
we'll work
anyone
on that.
wants
We will
to
work
get
on that. Yes, we'll start with gold and maybe like, we will do other exciting aspects which you highlighted. That's very new concept, but we will really pursue that starting with gold. Thank you.
Absolutely.
Thank you.
Absolutely. Thank you so much, everyone, for your time.
Yeah, thank you. So with that, we conclude today's insightful session on tokenization of gold and silver. I would like to extend my sincere thanks to our speaker, Mr. Arjun Khazanchi, for his sharing his wealth of knowledge and expertise into the insights into the process of tokenization and the associated costs, regulatory frameworks, and tons of use cases which he gave. You have truly enriched the understanding and uh, innovative approach to the asset management. So I would really thank you, sir. Thank you again. And
Thank you so much.
I would also express my gratitude to all the participants for your active engagement and your thoughtful contributions throughout the webinar. So thank you all. So once again, thank you everyone. So I look forward for the possibility of continuing such exploration on exciting topics like this. So until then, stay safe, take care. We'll see you soon. And we'll keep the chat box open for like 5-10 minutes, so that people can build connections, or if you have missed out or you want to ask more questions or something, will you can ask it, or we'll just note it down.